Limelight Capital here, back for another video. So this is going to be episode 4 of the Reddit DD archiving. Basically just doing read alouds of GameStop DD from either Super Stonk, GME, where it doesn't matter. I'm not picky about where it comes from, but yeah. So again, I'm not doing this for profit, guys. Any support is greatly appreciated. Definitely leave a like, leave a subscribe, because that's free, and that would be much appreciated. Any future profits, again, that potentially come from these videos will just go toward buying more GameStop stock. I'm very transparent about that, so let's dive right in, guys. So this is from a user called Alternative No 2917. Options data proves hedge funds need to be bankrupt. Options data proves hedge funds need to bankrupt GameStop or they will go bust. And this is listed as a D&D. So he says the TLDR, too long didn't read. Options data show that the hedge funds are still fucked and the original plan for bankrupting GameStop hasn't changed. Since I've become more active on Reddit, either making posts, commenting more, or responding to DMs, I've started getting threatening messages and insulting comments. These do not bother me, and the tone of my posts will now include a lot more sarcasm and mocking in response. Please enjoy. So yeah, I get it. I mean, I'm not big on the subreddits, but I have posted quite a few things and gotten a lot of interaction, and yeah, the shills are out in full force. So let's move on. Ape, are you struggling with the weekend? Do you miss eating crayons? Looking for some friendly confirmation bias to stop you climbing the walls? A little bit, yeah. You've come to the right place. I've gone through all the option data on Yahoo Finance for this coming week, which I will link in case you want to look for yourself. So I'm not going to click on the link, but there are screenshots here, but I will read them aloud. For all you apes that don't click on links, don't worry, I've got screenshots. I'm used to you lazy effers by now. Okay, thanks. So the first screenshot here is just shows options from the strike price of 50 cents up to $10. So it's showing the 50 cents to $10 strike price with open interest of 228,077. So there's a total of 228,000 options, that's calls or puts, in that price range. It's likely these options were placed a long time ago, so the premium that would have been paid on these puts is likely in the millions of bananas. Hedge funds go ouch. This quite simply is why we keep seeing GameStop attacked in the news, why Melvin lied to Congress to say they covered their shorts, why the data that is being reported by S3 and the others is just complete bollocks. The play was to bankrupt GameStop to save on tax. They didn't cover at $40. They aren't covering at $160 because they bet big on GameStop dying. So the next screenshot he has here is of the $11 to $30 strike price with open interest of 72,000. So there's 72,000 options within that range of $11 to $30. So let's quickly total that up. 300,919 puts with open interest for $30 or less. Let me just quickly check that price again. $158.36. Okay, so I'm sorry. I was mistaken. This is all just puts. This is not any calls. So what he's just saying here is the total of the first two screenshots adds up to 300,919 puts with open interest. So that's in the $30, $0, 50 cents to $30 range. Okay, so he says, that was a bad play, hedgies, would not recommend. I just hope for their sake that they don't have many more of these positions, otherwise they are going to be seriously hurting. So the next screenshot is the $31 to $50 strike price with open interest of 48,542. So yeah, I mean, again, guys, these are all puts. That's 48,000 more puts in a little bit of a higher price range. So he says, you think this will go below $50 per share with Captain Cohen in charge? So he's being sarcastic. I keep seeing news reports about Reddit being bad for the market. Users say stupid things like, we like the stock, apes together strong, and Citadel spend billions on order flow to know exactly what everyone here is doing so that they can counter it and profit it. Yet here we are. Shill's reading this. Please ask Kenny, Gabe, and any other dum-dum who keeps betting against GameStop. Why do you do this? I would like to know. Anyway, enough sass for now. Back to the data. So the next screenshot he shows is the $55 to $145 strike price. And there's an open interest of 46,769. Okay, so we are at 396,230 puts now, and none of them are in the money currently moving into next week. So yeah, I mean, there's a lot of puts on GameStop. It's kind of ridiculous. Now, to add up all the puts that expire this week on April 16th, there are 422,649, with a large majority of them currently being out of the money. So expect more effery and the price to be driven down further, but remember that the play is to bankrupt GameStop. That was the goal at the start for these hedge funds, and just looking at the insane amount of puts just this week, we can see that that hasn't changed. Just for comparison, there are 126,256 call options this week, including 500 from the legend himself, Deep Effing Value, at $12, which means he has the right to buy another 50k shares for $12 each, although it will actually be slightly less as if he decides to, as he would have paid a premium for the position already. For the Moon Boys, there are 33,300 calls on GameStop, being 800 or higher by Friday the 16th. Good luck to anyone on that YOLO play. I personally haven't made any. I just buy and hold my shares and then stare at them 24/7 and shout, do a kickflip. So far, no success, but I'll keep you updated. I relate to that. I mean, I'm not doing options for GameStop with a stock this volatile. It just doesn't make sense. I do think there is some value in going for, like a long YOLO play like that. It could seriously pay off. It's kind of worth the risk if you really have confidence in the stock. But me personally, I just buy and hold shares. In summary, there really isn't a need for more DD. Hedge funds put the house, the yacht, the Instagram model wives all on GameStop going bankrupt, and it just isn't going to happen. GameStop recently reported that preliminary sales are up 11% from the same time last year. Remember that they have also massively reduced costs by moving to e-commerce and closing underperforming stores. They could very well be on pace to have a more profitable start to the year in 2021 than they did in 2019 pre-COVID, and this is just the beginning for the Cohen era of GameStop. The squeeze is inevitable. If you have doubts, just turn off the news, close your laptop, and set a price alert for $800 per share so you don't miss the gamma squeeze before the short squeeze, before the mother of all short squeezes. Thank you, and I'll see you somewhere in space. Alright guys, so that is it. My thoughts on this: it's great confirmation bias. It shows that the hedge funds are still in it. And basically, what he's saying is the end goal, the whole goal of hedge funds and the shorts doing this is to eventually bleed the stock so dry that it goes bankrupt, so they avoid paying taxes on it, and they don't have to pay the counterfeit shares back. But that's just not going to happen. So yeah, I mean, at the end of the day, guys, I hope you got something out of this. I will be making more videos throughout the weekend, and yeah, thanks. I'll see you guys in the next one.